What's going on, everybody? It's the Blockchain Raccoon, keeping you updated with the latest cryptocurrency news and analysis. So, folks, today we're going to take a look at stocks of the future for the future growth of the metaverse. Because it's expanding, it's exciting, woof! And it's expected for the next 2 years to see some explosive growth. So let's get that portfolio ready for the metaverse. Because we all know that virtual reality has long been a staple of science fiction novels and movies. A place that seeks to blend the real world and the digital world into one. Thanks to leaps in VR technology and computing power, fiction is becoming reality, creating demand not only in this space but also for metaverse stocks. The metaverse has plenty of potential to be as big as the internet. At its core, it's a realm that will function like the internet that we see today, but one in which our avatars can move through and participate in. However, it will have its own economy. A host of companies are seeking to make the metaverse happen. For example, Epic Games, through its popular Fortnite game, hosts virtual concerts, including one they held early in August with Ariana Grande. Also, payment firm Visa recently bought a non-fungible token just in order to help it better understand the digital commerce world. And a mega-cap social company just changed its long-held name to reflect its massive move into technology. But that's down below. But, Facebook. So, folks, there's plenty of potential for an investor point of view when it comes to metaverse stocks, not just in crypto. In fact, Bloomberg Intelligence estimates that the market size for metaverse could reach $800 billion by 2024. That's bullish. Alright, so let's take a look into this. Number one on the list of metaverse stocks that could be explosive. Fastly. Metaverse sector for infrastructure with a market value of $4.8 billion. Cloud computing and decentralization has created a slight problem. Latency or data lag. I mean, every player or gamer knows that. So users experience this all the time. Clicking a link on the internet browser and waiting for the next page to download or process to happen. Now, the issue is the distance the data needs to travel, which isn't a big deal if you're looking up the weather or, checking out, recipes or whatever. But if you're in a self-driving car or doing robotic surgery, then that can be a problem. But this is where edge computing technology company Fastly, stock ticker symbol FSLY, roughly around $40 a share, comes into place. Fastly operates on edge computing infrastructure as a service platform that brings servers and other equipment to the source of data creation. Fastly's platform can move 145 terabytes worth of data per second across 28 countries. Basically, it helps reduce the lag time and latency of decentralization. Companies like the firm's offerings, with revenue growth at Fastly has been swift since its launch about a decade ago, with its revenues growing 14% year over year in the last quarter. Like cloud computing, the metaverse will need plenty of edge computing solutions to make it happen. Think about the sheer amount of data transfer needed to create a virtual world in real time that users will be able to interact with. Without edge computing and companies like Fastly, these sort of transactions simply will not happen. In addition to its prospects as a metaverse stock, Fastly also makes an interesting growth play on the continued expansion of cloud computing. And with the recent tech wreck-induced drop to shares, Fastly is cheaper than it's been in a while. So, check it out. Number 2, Nvidia. Metaverse sector for infrastructure. Market value $516.2 billion. Nvidia, stock ticker NVDA, roughly around $207 a share, has frequently been touted as one of the biggest semiconductor stocks to buy for the long haul. Not shockingly, its foray into the worlds of artificial intelligence and other fast processing chips make it a powerful player in the world of the metaverse stocks. Nvidia's chipset already finding their way into a variety of servers and other decentralized computers. Or did I say decentralized? Well, centralized computers that are needed to run complex calculations. That includes edge computing platforms run by firms like Fastly. With this leadership position and the need to move with speed, Nvidia is almost guaranteed to be a top winner from the metaverse revolution. Another reason its future looks bright is its pending buyout of ARM Holdings from SoftBank Group. ARM is a major player in patent software that allow chips to be implemented into computer systems. With this buyout, Nvidia will be able to build out its end-to-end ecosystem. In other words, it will be able to place its graphic processing units and advanced chips into more systems directly and boost computing power. And the metaverse will need this kind of computing power to work. Man. Now, while it's roughly a $40 billion buyout of ARM has not been assured yet, with the UK regulators among the most recent to raise antitrust concerns, Nvidia is still a potential winner from the metaverse. After all, its chips continue to become the standard with regards to high-speed calculations and computing. Alright. Number 3, Roblox. Metaverse sector, a virtual platform with a market value of $43.5 billion. Woof! Now, a video game seems like an odd choice for fashion house Gucci to launch an exclusive event, but it goes to show the pending power of the metaverse and how Roblox, stock ticker RBLX, around $75 a share, is building the future. On the surface, Roblox is a video game, a very, very popular one. The company has 43.2 million daily active users who logged 9.7 billion hours of engagement in the second quarter alone. The thing is, it's not really a single game. Roblox uses outside developers to build various games, content, and other entertainment for its users. The firm makes money by selling its virtual currency that players can use to access these games, experiences, content, and even virtual clothing, like a Gucci bag, for their characters. The reality is, Roblox has already created the base for the metaverse with its game, and it's expanding that even further. In the company's recent earnings call with analysts, Roblox CEO Dave Baszucki mentioned that the firm's platform welcome 6-year-olds and at the same time 30-year-olds. Kind of creepy. Ultimately, Roblox sees its platform as a virtual place where these immersive experiences like concerts are going on all the time, just as play is going on all the time right now, he stated. So make this happen, Roblox is spending big bucks on talent and acquisition to build out its version of the metaverse. A prime example is its recent purchase of Gilded, a platform designed to connect various gaming communities. As for the company itself, Roblox continues to see increasing revenues from its platform and business model. For its latest quarter, the firm realized a whopping 126% year-over-year jump in sales. This follows a 140% year-over-year revenue increase in the first quarter. Now, given its leadership position and the foundations for the next wave of technology, this metaverse stock looks hot to be a powerful choice for your portfolio. Number 4 is Meta. Just to let you know that Meta was Facebook since they rebranded themselves on October 28th here, so just to make you aware. Okay? But this does tie in because Mark Zuckerberg and Facebook, with their ticker symbol FB, $339.39, set the stage for the firm's metaverse vision back in 2014 when the company purchased VR startup Oculus. On the whole, Facebook has had a hard time with the division in terms of its social media operations, and it always seemed like a fad business for the firm. But Zuckerberg may be finally getting the last laugh. In August, Facebook launched a public version of a new Oculus app called Horizon Workrooms. Using the firm's VR headsets, users are able to participate in meetings with their avatars. They can see their computer screens, keyboards, and even participate on virtual whiteboards. In the future, working together will be one of the main ways people use the metaverse, Zuckerberg wrote in a recent blog post, and Facebook looks to be one of the first to bring such tools to the market. Given the recent surge in work-from-home arrangements due to COVID-19, this certainly could be a major win for Facebook in the near term, and even in the long run. Because Facebook is already a collection of communities via its various apps and communication platforms, so the metaverse makes plenty of sense for the company to move in this direction. Over the long haul, this could bring a secondary stream of advertising revenue or fees for content creators within its platforms and system. This is a little bit off, but given the metaverse stock's leadership position in hardware and current first mover status in apps designed for work, Facebook could get there earlier than others. Better yet, Facebook represents a safe play on the growth of the metaverse. There's no denying the firm's profitability and cash flow generation. This could give very conservative investors peace of mind as they look towards investing in the metaverse. Alright, number 5 on my list here is Autodesk. Yeah, I said Autodesk. The metaverse sector is software with a market value of $62.7 billion. Autodesk, ticker symbol ADSK, roughly $285, went public back in 1980s. Holy crap. It's best known for its pioneering AutoCAD software. This application allows engineers, architects, designers, and academics to virtually design and create buildings, products, infrastructure projects, and more in both 2D and 3D. It's the standard software for the industry, and the bulk of construction projects touch software at some point in their life cycle. That software is still in the firm's bread and butter, helping it realize more than $1 billion in sales during the second quarter of this year alone. But this is where it gets interesting for Autodesk, is that developers have started using its software to design and build virtual worlds for gaming and entertainment. The firm now offers, products designed to render 3D animation, construct and launch virtual buildings, and create within VR and augmented reality spaces. Man, that's crazy. Revenue from this segment went up 10% year over year in the last quarter. Now, Autodesk is a natural fit and quickly becoming the top choice for developers looking at the metaverse and its construction. Perhaps the best part of all this is that Autodesk has continued to pivot towards a lucrative software as a service model, with recurring revenue accounting for 98% of total sales in the most recent quarter. Those recurring revenues have translated into plenty of profits as well. Earnings surged 23.5% in the second quarter, with Autodesk producing $186 million in free cash flow. Now, that is cash remaining after a company has paid its expenses, interest on debt, taxes, and long-term investments to grow its business. Phew! Now, with the long history of 3D design behind it, Autodesk makes a top choice for investors looking at metaverse stocks. Alright, number 6 is Shopify. Metaverse sector, payment services, with a market value of $168.2 billion. A key aspect of the metaverse is that creators want to have a robust economy within its virtual walls. Digitalization of assets, currency, and the ability for content creators to get paid is a must. That's where e-commerce specialist Shopify comes in. We all know about Shop as the firm that lets small business owners launch websites and conduct businesses online. Since its humble origins, Shopify has expanded its toolset and offerings to include a number of tangible products necessary for small businesses to thrive. And now it's doing so with the digital economy and the metaverse. Shopify made 2 massive moves this year that tie into the potential for metaverse commerce. One is the acquisition of AR App Primer. Here, users can see firsthand the effects of a purchase or project in their space. For the metaverse, it gives Shop a powerful tool that subscribers can use to build out potential stores or shopping experiences in the digital world. The second is the launch of a new NFT platform that will allow digital creators to sell art and other content directly to consumers. The Chicago Bulls were the first to test the offering, launching a limited NFT of the basketball team's 1991 championship rings. The two efforts set up Shopify quite nicely to plug into the metaverse and give it a foothold into the potential digital economy of the virtual world. As these future aspirations play out, Shop is still doing what it does best, designing e-commerce solutions for businesses. And as a leading provider for such software and apps, there's plenty of safety with shares of this metaverse stock. All right. Last but not least, number 7. Roundhill Ball Metaverse ETF. Assets under management, $104.6 million. But they do have some expenses, 0.75% or $75 annual fee for every $10,000 invested. Ugh. Given the buzzwordy nature of the metaverse, it's not surprising that there's already an ETF tracking the initiative. In this case, it's Roundhill Ball Metaverse ETF, Meta. Roughly about $14 a share, and truth be told, it could be the best way for investors to play the concept and birth of the virtual world. Meta was developed by futurist and venture capitalist Matthew Ball, among others, to fully represent the entire spectrum of metaverse. From infrastructure and interface to content development experience, Meta holds them all. 50 different stocks, in fact, in this ETF fund. Cloud solutions, gaming platforms, and computing component stock make up the vast bulk of the ETF holdings, at nearly 70% of total. Top individual holdings include Nvidia, Microsoft, and China's gaming giant Tencent. Now that's where some caveats when it does come to play for Meta. For one thing, it's new. Just like you took the wrapper off kind of new. The ETF only launched at the end of June. Generally, it's a good idea to wait for a bit for a new fund to gather assets and trading volume before taking the plunge. This is especially true when it comes to the thematic and specialized funds. With that said, the ETF has already gathered more than $100 million in assets. Volume has started to pick up, with Meta's 30-day average daily volume around 250,000 shares. Secondly, investors should be aware of the cost. Right now, Meta is charging 0.75% in annual fees for expenses. That's a little on the high side, even for a specialized fund. Now, as a point of comparison, a very similar metaverse-styled iShares Virtual Work and Life Multi-Sector ETF, IWFH, charges only 0.47% in expenses. With those two caveats in mind, Meta may still be a good choice for investors looking to cash in on the metaverse stocks for a broader stance. Well, folks, that was my little findings here. I'm sure there might be more. If I find anything else, I'll certainly make another video about it. But man, woof, the metaverse is certainly here to stay, folks. Do your own research, look into everything. It's a great opportunity. Don't miss it, because something like this is only going to happen once a generation. What's happening right now is just mind-boggling. So, with that in mind, I'm going to wrap up this video by stating that I am not a financial advisor. Please do your own research, because I am, I'm just a little raccoon making YouTube videos about cryptocurrencies. Thanks for tuning in.